All right. Happy Wednesday, VB Nation. My name is Ryan. Welcome to the channel if this is your first time. Now, I will say this, the CPI data came out this morning, 2.5% annualized. I mean, that's the lowest rate since 2021. However, the major indices, they're selling off sharply today. I mean, I'm recording this around 10:30 in the morning. Only an hour into the open, the Dow Jones down almost 700 points. The NASDAQ was positive there for just a minute. Now it's dropping like a rock to 129 in the negative. Now, this being said, there are some things I want to show you in the VectorVest 7 software. I'm not going to give you any stocks today because I don't feel like it's a good time to be buying, right? Why would I advocate any type of stocks? If you're going to look at stocks, I'm going to tell you right now, insurance companies. I've been mentioning that a couple times over the last few weeks. So if you're feeling aggressive, feeling feisty, go ahead and look at some insurance stocks. You might get lucky there. But other than that, the momentum is to the downside. But I'm not too convinced that contra ETFs are the way to go. So let's go ahead and dive into the VectorVest 7 software so I can show you exactly what I'm talking about. All right, we're in the VectorVest 7 software. I mean, you see the homepage here. We follow the markets. I mean, major indices all red today. You see they're down quite a bit, red lights across the board. And if you're new to the software or you're new to watching this channel here, see this little C/down? That represents our confirmed down situation. Now, confirmed down, that's our slowest moving market timing signal. It really captures the big moves in the market. That being said, why would I tell you to go out and buy some stocks right now, right? That's exactly why I'm not giving you any stocks to purchase right now. If you want to go buy stocks, I'm going to point you in the right direction. Top RT industries, right? Look at this. ETFs, sectors, utilities. Getting defensive, right? Very popular right now. A lot of investors are loading up on utility companies. That's the reason why it's, one of the highest momentum trades out there right now. And on top of that, insurance, right? We see insurance, account health. And look at this. If we go over to top RT sectors, utility and insurance once again. Now they're all down today. So even the industries that have been working over the last few weeks, kind of bucking this downturn of the market, they're down again today. So that's why I'm going to tell you straight up, don't go out and buy any stocks, right? If you do, just know you're taking on a lot of risk right now. Now, to the opposite effect of that. Well, Ryan, if you're telling me not to go out and buy stocks, should I get defensive in my portfolio, right? Should I buy contra ETFs? Should I do some kind of, option strategy, selling covered calls, things like that, if I plan on holding my positions? Now, covered calls, never a bad idea. As long as your strike price and your expiration is lined up with something that you are comfortable with. But the reason why I'm not even going to recommend contra ETFs right now, if you were going to get a contra ETFs and you were following the VectorVest 7 system, I mean, look at this. We've had red lights. The first red light appeared back on August 28th, right? Just about 2 weeks ago. That would have been the first sign of weakness in the market. And by then, 3 red lights across the board at the beginning of September. Now, I'm going to show you the value of the VectorVest 7 software. And this one indicator really does help pay for itself. And that's going to be the MTI. Now, the MTI historically likes to get top heavy around 1.5. You can see the color guard going back to August 23rd. We were coming from those levels here around the 1.3s, and you see it dropping and dropping. Well, historically, when does it like to look for a bottom? That's going to be around 0.6. Now, I'm not going to say that MTI is definitely going to hit 0.6, but you see that there's still some more downside potential to go. With 3 red lights right now and a brand new confirmed down situation, I wouldn't be surprised that MTI made it around the 0.6s. But 0.6 is not that far away. And also you have to remember that the first interest rate cut that's really possible this year is going to happen next week. So the last thing I want to do is advocate you to buy contra ETFs and then, a couple of days from now or next week, the market starts rallying and all these short positions get closed out. So me personally, I think just managing the positions that you're already in, getting cash ready for when opportunities present themselves. So now let's go to the market timing graph and I'll show you exactly what I'm talking about. Now here we have the market timing graph. The VectorVest composite, that's how we analyze the broad market. Essentially, it's the 9,000 plus stocks we're currently tracking. So it's like combining the S&P, Dow Jones, NASDAQ, Russell, all into one. It gives you a real good sense of broad market movement. Now you can see the MTI down below. Now I do have 2 red lines here between 1.5, 1.6. Again, this is historically when the market is typically getting top heavy. The green line down below at 0.6, right? This is typically when the market is looking for a bottom. We see historically did very well from this time zone here, just using the date line. We notice that the MTI hit a high just above 1.6 right as the candlesticks hit its high at that point. And just to the adverse effect, when the market started pulling back, again, the MTI got around to this level and started looking for a bottom. Historically, you can see that happen several times here. Like I said before, it's not an exact, 0.6 measurement, but when the market is pulling back, it does historically like to get around these levels. You can see sometimes it breaks, sometimes it gets just right above. Right here, it's at 0.68. And for the most recent example, we have at 0.7. Right now, with the MTI still above 0.8, and with a brand new confirmed down signal. And we see the candlestick today. The bears are in charge here. If we go to 3 months, look at this. Zero buying pressure as of right now. The VectorVest composite at 66.39. Now, the reason why I'm not getting too optimistic and buying contra ETFs right now, because I think it's a little late to the party. Now, if you do decide to buy some contras or play to the market to the downside, I would look at it as a pretty quick swing trade, possibly over the next few trading sessions. But this level of support here, or really a zone from 65.24 to 66.12, was caused by this consolidation prior. So this is a level of support that I'm looking at. Now, if price action were to break the bottom level of this support, definitely get more defensive on your portfolio. But again, with the market approaching a clear support zone and the possibility of an interest rate cut next week, I would be more concerned about taking profits and mitigating risk. So that way I have some cash on hand when opportunities present themselves. Now, let's take a look at the CPI chart today. Here we have the CPI over the last year. I'm going to add the T-bills to it just so we get a better visual. Now, if I go back historically, you can see I've got quite a few levels on here. Now, the red, this is a zone. I've done some videos on this before. We see the consolidation with the CPI data really fluctuating between the top level around 3.7 and the bottom right at 3. Now, last month's CPI report did break out to the downside of this channel at 2.9. Today's CPI report came in at 2.5% according to CNBC. It hasn't been updated in the VectorVest 7 software yet since the data just came out, but I've said this in a video before. If CPI broke to the downside of this channel, I would definitely get more excited about the potential of interest rate cuts. So personally, I believe that we will be seeing those cuts as early as next week, which might just spur some optimism that the market needs. All right, VV Nation. Now, I know it's not very exciting. I don't have, great stocks for you, but why give you that unnecessary risk, right? And you saw my explanation of why I'm not, touting contra ETFs or playing to the downside of the market right now. There's just not a whole lot of downside room to go. Now, if we broke that level support, that support zone I showed you, and we didn't get interest rates, cut next week, then that would change the game. And I'm sure the video next week would definitely stick to that tune. So if there's anyone out there, telling you to go buy stocks right now in this dip, I don't like putting down anybody, but I don't like just bad advice given, right? And there's a lot of momentum with a fresh confirmed down signal right now. I do not see the optimism. Now, if you found this video informative and you found it, gave you the ability to really stay on the right side of the market going forward, make sure you hit that like button, subscribe to the channel, and I'll see you next week.